All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone?
Man, welcome back, man, to the best show on earth. I will say that. I mean, I'm ready to go to battle with anybody, man. But this is where we break down all the markets, trying to take away the noise, trying to take away all the fluffy stuff that always happens in the market, and trying to give you like a clear, concise direction where the market is going, right? Because a lot of times we hear a lot of noise and it's like it's just way, way, way too much out there. But let's talk about the market this week, man. Again, I feel like we're still ranging. We haven't really gone anywhere. You look at all the big major ETF, SPY, QQQ, all that stuff. We're still ranging. We haven't even broken high. We're still kind of like ranging a little bit. I mean, SPY kind of went up a little bit today. QQQ was okay today, but again, I don't see any clear momentum to the upside just yet. We are getting rejected at the same level from back on the 11th again. So let's see how we do tomorrow, man, when the market opens back up to see how exactly we go from there. But Wale, man, let's do a quick breakdown of the market this week, man. Like, what do you see? How do you feel? All of that.
Yeah, still range bound. Again, we haven't done anything in the last, 2 or 3 months.
Yeah.
I will say that when you take off how should I put it? You take off the headlines and you kind of do a deep dive into what's going on in the markets. Value is outperforming growth. You're seeing
Yep.
good. Energy was doing really good. Financials was doing really good until a couple of days ago when they all kind of sold off. I didn't really see all the details behind that,
Mm-hmm.
but wasn't too sure about why they sold off. But value is outpacing growth. And another thing that we talked about again, this is why I keep telling people that you're not going to get quality information anywhere else in the market. So remember at the end of last year when I was talking about how utilities could outperform the S&P?
Mm-hmm.
XLU is up 8%, while the rest of the market is up, well, the S&P is only up 1%.
Yep.
So remember who told you where to look first.
Yep. Yep.
So we're
And
seeing,
it is gonna continue to go. It's gonna continue to go up, That's
and I
crazy.
and I keep thinking, I keep looking at, we're just seeing a rotation away from hyper growth stocks into a little bit more of the value and into more of the more stable stocks.
Hmm.
Another thing I keep taking a look at is you continue to see outperformance in international. So EEM,
Yes.
EFA, those are the areas where investors are getting a little bit more value than the domestic areas of the market. So,
Hmm. Hmm.
um, you know, I'm I'm not that I'm not optimistic about what the Mag 7 and the big name stocks that we tend to talk about all the time. I'm not really worried about those stocks per se, but I do feel that you're going to get more bang for your buck elsewhere. And speaking of elsewhere, TSM just hit $2 million,
Two
two
trillion.
trillion dollar market cap yesterday.
Yep.
I talked about that being one of the biggest catalysts in the markets last year. And if you look at TSM compared to like an NVDA over the last year, TSM is up over 100%, while
Yep.
NVIDIA is only up about 48%.
Hmm. Hmm.
So if you know where to look, you can find a lot of good names out there. I just don't think that you're going to get them from some of these high um, growth names like the Mag 7, because they're right
Right.
now, they're focused on spending money. And I think they're being penalized for that. So we'll see what
Yep.
happens in the
Yep.
future.
Yep. You're absolutely right. They're spending money, and guess what? Guess where all the money's going? We literally told you guys. It's so we spent all of last year designing. Like if you guys again, look, if we can break this down, spent all the last year, maybe next last couple of years designing the chips, making sure like NVIDIA was coming up with all these different type of chips and all this stuff. This year and maybe the next 2 to 3 years is going to be on manufacturing those chips. And guess where all the money is going to go? It's going to go to the companies like TSM, maybe AMD also. I mean, AMD, maybe Intel. If TSM really needs some help, some of those companies might run to those some other manufacturers to be able to start making those. But TSM, like we always told you guys, like they're very specialized. They have specialized equipment. They make a very intricate chips that not a lot of companies can do. So that's their moat. That's their advantage over all the other people and stuff. So Again, this is very, very important. Last year, in the last couple of years, was spent on designs, right? This year and the next year, maybe even the year after that, is going to be spending on actually making the chips and deploying them. NVIDIA and all those companies, they might start making money later on down the road, right? Once they actually start selling those chips that TSM is producing. I mean, they might get creative and start selling it ahead of time, do pre-sale or whatever. I mean, some of them they probably did already, but again, this is the time to start focusing on companies like that. You talk about XLU, you talk about energy a lot, utilities, and all these different things. All of that stuff come into fruition right now. So we're seeing like money moving around, but you gotta really like pay attention. Emerging market, that's another thing we talked about. A lot of emerging market too also is up like 13% or something like that, I think. So
And if you look at the way I see how the whole AI revolution is sort of moving, it's the foundation is still being built right now.
hmm
The
hmm
foundation is still being built. And as that foundation is being built, the hyperscalers right now are focusing on spending money to become more efficient, to then get the ROI on their investment in the
Yep.
next 2, 3, 4, 5, 6, 7 years. Whether that means that they're going to reduce headcounts or whether they're going to start consolidating teams, we don't know what that looks like. But right now, they're building the foundation to become more efficient in the future. As that foundation is being built, right now, you're getting money spent on companies that are producing the equipment and the needs of building that foundation. I mean,
hmm
I'm looking at my watch list right now. VRT just hit an all-time high this
Yep.
week, right? TSM just hit an all-time high this week. Go look at names like AMAT, LRCX,
hmm
ASML. Um, this is one I gave to our investment group that I guarantee you no one was talking about that's up 35% this year. Tokyo Electron, go
hmm
do your research on that company, right? Those companies that are providing foundational support for AI right now, they are really, really, that's where you're seeing a lot of the growth.
The time is in. Yeah.
Yeah. So once we get to a point where the hyperscalers start showing return on investment on their AI demand, if they do, we don't know yet. That's when I think that the QQQ and the spies will really start moving. But until we start seeing that, we could be in this holding pattern for quite some time. So
Yep, yep, yep. Which makes sense, like as an investor, you gotta think about where the next money is gonna come in. You have to know where the next opportunity lies. So, you have to be a step ahead of everybody. And I feel like we've been, trying to help you out a little bit, telling you guys where to look and
we've been we've been giving gems out every single episode.
where to look and how to position, even like when it comes to like I mean, of course this is not like a financial advice, but it's like even how to position your 401k. We talked about, hey, maybe it's time to start thinking about emerging market. We start thinking about value stocks and all the different things, and voila, go look at both of those segments sectors. It's up. If you would have made some changes a little bit, maybe not all of it, but just a little bit of changes here and there, you would have seen some money coming into your portfolio. So
Yeah.
again, man, you are not gonna see this anywhere, man. I'm telling you. Like, by the time people start talking about some of the stock we talk about, it's we already moved on to the next. You know, I'm just saying. Like, by the time people start talking about Aqua, we already move on to like something else. You know what I mean? It's just like people start talking about VRT while they were talking about VRT like 2 years ago. So I don't know what to tell you. But let's move on to this Nvidia's earning, man. I don't know, man. I didn't see any like alarming things in that. I mean, Nvidia kind of rose like I think it went up to like maybe like
Almost 4%.
4% and it just dropped from there. You know what I mean? I think it's like we are maybe like 19, negative 19.19% now overnight. So we dropped back to like the daily level, basically. Kind of like there's no gains, basically. So let's talk a little bit about that, man. I mean, they didn't report anything bad, but I think taking everything into account that we just talked about, that might be a reason why they dropped.
Yeah. So let's just give you the numbers. So revenue came in as a beat, $68.1 billion for the quarter. Let's put that in perspective for the quarter.
That's just one quarter.
And they're expecting first quarter revenue of for next quarter at 78 billion.
Hmm.
So to me, that shows that there's still demand for their product. Quarter over quarter growth, 20%. Year over year growth, 73%. So again, AI continues, data center revenue continues to be the bulk of their business at 62.3 billion dollars. Um, Gross margins. This is another important metric to look at when you're looking at companies to see if they have pricing power. Gross margins are 75%. So Blackwell customers still buying Blackwell. They're still in talks about getting some of their chips shipped off to China. I don't think that's been
Yep.
resolved yet. And I don't think, from what I heard on the earnings call, I don't think any China revenue was reported for the quarter.
No.
So once the China revenue, let's assume that it gets approved, that goes to their balance sheet. So nothing bad for the quarter. They beat expectations on the revenue on the EPS side. So why it sold off? Again, I didn't hear anything on the call that gave me any sort of like caution or alarm. So, I don't know. I can't really figure out what's going on. We'll see if it, sorts itself out tomorrow. But NVIDIA continues to show that they are the backbone for the supply when it comes to GPUs, you know, AI inference and all that stuff. And yeah, continues to grow at a
Mhm.
very healthy clip.
Yep. 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 And again, like they're definitely going to be the most dominant company when it comes to this whole AI chip movement. So it's like Jensen Huang, man, this man is smart. You know what I mean? Like he is really like injecting NVIDIA into every single foundation when it comes to AI. So it's a smart move on his behalf. So he's solidifying Nvidia to be around for a long, long, long time, right? And for anybody that's trying to move Nvidia and maybe like move to a different company's chip, you're gonna have a hard time because if everything is built on Nvidia, then the likelihood of you moving away from Nvidia is gonna be very, very difficult, you know.
Yeah.
And big companies do not like changing softwares. Change in softwares in different companies is very hard. It takes a lot of manpower, a lot of energy to just make a move for a software change and all that. So
Yeah, and I know that AMD is kind of like the junior varsity of the GPU space. They still have customers that are buying their chips, right? They still
yep.
have and we'll talk about Facebook. Some customers are diversifying where they're getting their chips. You
Hmm.
know, to me, I think that's not a bad strategy, right? I think I don't know what the cost is compared to AMD and NVIDIA when it comes to their GPU pricing. I don't know what the difference is, but those are the two biggest names in that GPU space.
Hmm.
Regardless of who wins, I will continue to say that TSM is still going to get their phone call to do the manufacturing for either one of those companies. So, yeah,
Yep.
again,
Yep.
I really like what I heard from NVIDIA. I just don't know if investors are as excited about where the stock is trading right now,
Yeah. Yeah.
for it to push to an all-time high, because the all-time high is at 212, still
Yeah.
not quite there yet.
They're gonna have to come up with something. I don't know what they're gonna come out with. It has to be something crazy that's actually gonna push them a lot higher. Or
Yeah,
I don't know, man. Like it's they're gonna have to come up with something different than because you said it too. Like when once you start setting certain expectations, investors expect you to beat that like crazy, not
yeah,
by percentage. They want you to beat it and just like burn through that thing in order for you to be able to, oh shoot, something else has happened. This is exciting.
correct, exactly.
But if you
Especially when
keep
you,
meeting it,
yeah,
yeah.
especially when you get to this size, like we're talking about a company that's at $4 trillion, pushing 5 trillion.
Hmm.
Once you get to that size, the expectations and the pace at which you can grow starts to slow down a little bit.
Hmm.
So, I still think long term, again, NVIDIA is still the backbone of what everybody pretty much is going to need when it comes to AI. But the growth, as far as the stock price is concerned, isn't moving at the same speed as we saw back in like 2021, 2022, 2023.
Yep. Yep.
But it continues to grow at a healthy clip, in my opinion. So I still like the company long term.
Yep. Yep. Absolutely. But let's move on and talk about software, man. Like I feel like software is being getting hit like crazy left and right. I mean, they got hit when the rate moved higher. They got hit when AI start, disrupting some of those, some of those models that they have. And also when the investors start rotating away from softwares into like, semi stocks and all this stuff. So again, we're seeing, I don't, we were talking about this before we got on, like how Anthropic is affecting some of those software companies. Is that actually taking that into account? Is that hype? Kind of we saw what happened with, the deep fake when from China, all that stuff that kind of came, market reacted like crazy, dropped, but then we were like, we just ignore the whole thing. Right now, you don't hear anything about deep fake anymore. So what's true? What's like overreacting? Let's talk a little bit about that.
Yeah, so I think Anthropic came out with a tool over the weekend that's supposed to help, I guess cybersecurity stocks, right? Kind of
Hmm.
detect things and, you know, creating code to help them detect things pre-deployment. And we saw a nasty drop in a lot of the software stocks on Monday. But I want to tell people to do your homework about what this product actually does. Think about cybersecurity. Cybersecurity's best use case is after it's been deployed, not before. The Anthropic tool, the coding tool that they have, is supposed to help cybersecurity companies pre-deployment,
Hmm.
helping them find mistakes, helping them find little nuances that can be, better utilized and better like fixed before they deploy. But once you deploy the software, that's when it becomes the most important.
Right.
And the Anthropic tool does not interfere with that. So again, I keep hammering on the fact that the indiscriminatory selling in the software space to me is a little bit overblown. Will some companies get hit? I think so. And what a
Absolutely.
lot of people are saying is that any company whose revenue model is like on a per seat basis, like the more seats you buy, the more money it's going to cost you and the more money they make, those companies might have a hard time. But the companies that don't have that type of revenue model, those companies to me are going to be okay. And
Yeah.
in the space that I've kind of just been honing in on, and I continue to hone in on, is cyber security, because that's not a per seat basis type of business, and it's essential.
Yep.
ServiceNow, CRM, Workday, I can't speak on those. Those ones I'm a little iffy on, but the cybersecurity companies, to me, those are the ones that I feel AI is going to make them more efficient, in my
Efficient.
opinion,
Yes.
right?
Yes.
It's going to help them detect things faster, help them deploy faster, help them solve problems faster.
Yep.
That's what I think AI is going to do for them. I mean, one that I missed that I thought that was kind of like dead in the water and thought that they were going to be like, they're going to get bought out. Go look at Fastly, FSLY. Go look at that chart over the last month.
Mm. Well, which one?
FSLY, Fastly.
Oh, fast. Yes.
Fastly is up, what, 83% in like a
Ooh.
month
Sheesh. Yeah,
after
you
they
have a
reported.
you have a crazy gap up on the 12th.
Yeah, I think they reported earnings. That was a $9 stock back on right before they reported on February 11th. Now trading at 18.15, hit a high of 2027 not too long ago.
Mm-hmm.
I thought they were a company that was going to be dead in the water. I missed this one because I thought they were going to they're going to be a buyout target. But people are finding some value in that company. Probably another company that was heavily shorted, so there's probably a lot of short covering happening in that stock as well. But to me, I really do feel that there's still long-term value in cybersecurity. Um, and some of these companies like Snowflake are partners with Anthropic. Like I was listening to
Mm-hmm.
what the
Mm-hmm.
CEO was saying that they're actually partners. Snowflake, I think, is a data management company. They're not a cybersecurity company. I don't know how AI is going to affect their business per se, but we'll see. Um, I think Workday reported earnings. They were down 10%. They actually finished in the green today. So there was a lot of buying of
Mm-hmm.
Workday.
Mm-hmm.
I don't know why, but we'll have to wait and see what happens. I think CRM is down today after they reported earnings. I think Snowflake was also down after they reported earnings. So we'll see how it plays out. But again, if you're looking for um, opportunity, to me, cyber, that's where you should be looking.
Yeah, yep. And I completely agree with you. You know, like in the cybersecurity world, you need faster detection and faster resolution when it comes to problems. And AI can just analyze some of those attacks really, really quick and be able to pinpoint the issue for you real quick. If not, be able to help you get to the solution a lot faster. So you're no
Hmm.
longer spending hours throwing people in to read the code to see what's happening and all this stuff. But um, it's definitely going to be a huge, huge help. But I want to go back to something you said in the past. We're probably going to see a lot of consolidation when it comes to the cybersecurities. Bigger companies eating smaller companies, even bigger companies kind of getting together, big companies. So
Hmm.
that might start to happen. So we can kind of have maybe top five players basically, but all the little ones probably gonna get bought out. Honestly,
Yeah.
once they start like moving toward that place. Yep.
And we saw a big acquisition with Palo Alto Networks, and they bought CyberArk.
Yep.
That was a big acquisition.
Yep. Yep.
And if you go look at the last earnings call with Palo Alto Networks, even though that stock sold off after it reported, look at the numbers when it comes to their core business. Revenue's not slowing down, margins are not slowing down. The only thing that was a miss was future EPS because I still think that they're being penalized for spending money on acquisitions.
Hmm.
But I think long term, if when we come back and visit this stock 12 months or 18 months from now, I have a feeling that it's going to be a lot higher than where it is right now. So again, I will say
Hmm.
execution does matter, but I don't think that this software apocalypse is going to eat into some of these really quality cybersecurity names out there.
Yep. Yep. But let's move on, man. This is another segment that we talked about a little bit about when it comes to private credit. I know we kind of talked a little bit about it last week. But is there a bubble forming? Is the bubble about to burst? I don't
I just
know.
I just want to say before all the big banks are talking about cracks in private credit, where did you hear it from first?
Mm-hmm.
Weren't we talking about
Mm-hmm.
this like 6 months ago?
Mm-hmm. Yep. Yep. Just listen to this. According to a new industry report, private equity returns have stalled for a fourth straight year, and the sector is sitting on roughly $3.8 trillion of unsold assets. That is nuts. Something is brewing and something is happening. Um, and that sector, I mean, I don't know, man. Is that could that be the next, I don't know, sell
So
off that we get?
I will say this. UBS came out and was saying that they're starting to see cracks in the private credit market.
Mm,
Jamie Dimon came out and said that they're starting to see cracks in the private credit market. Uh, Morningstar says private credit quality has continued to worsen, with downgrades materially outpacing upgrades, and that their 2026 outlook remains negative. This is from Reuters. The real narrative: there's a big concern in how private credit performs when liquidity is demanded and defaults rise because the market grew so big between 2000 post 2008 financial crisis.
mhm.
So the private credit market is a 1.7, $1.8 trillion market. Investors are looking for equity-like returns with less liquidity. Now we're seeing defaults.
Yep.
We're seeing credit quality start to worsen. We're starting to see more banks and more analysts starting to say, hey, this sector could be in trouble. Again, I will always say this. It all depends on how bad does it get, right?
Hmm.
Are these just concentrated, isolated events, or is there bigger cracks in the whole picture of private credit? Let me give you one insight that I want to give you, and this is another reason why you should listen to the Wall Street Rundown, is when we look at yields, right? Yield spreads. Yield spreads are what tells you how much risk is priced into the market in the bond market. The bond market will give you an idea of where to look when there's risk elevated first. The spreads between low quality bonds, so triple C or lower, and treasuries has hit the highest it has all year at 915 basis points. So, are we in an area where I would ring the alarm? Not yet.
Mm-hmm.
But are we in an area where I would be monitoring things? Yes. And if again, I said this last year. I said if there's anything that's going to disrupt the overall markets, or if there's any cracks in the overall markets, to me, it's going to happen in the private credit, and I also said commercial real estate markets.
I was gonna say that too.
Those were the two areas where I said I would be a little bit worried about, because a lot of their business is tied into debt. And you
Mm-hmm.
have to understand how the stock market works. When money is cheap, things are good. When money is expensive, liquidity is tight, things
Yep.
can get bad. And we saw what Blue Owl did last week. People were like, "Oh, we want redemptions." They was like, "Hold up, we got to do something different."
Yeah. What's going on? Yeah.
So I would keep monitoring it. We're not at a level where I would be like, "Oh my God, the sky is falling," but I would say that, this is not a, if we're playing red light, green light, this is yellow light.
Mm.
So that's what I would be looking. I would say that
Like, do
right
you
now.
think like we like at the 2008 subprime time, or is it like this is a little different?
So I had a really long conversation with ChatGPT about this, because this was my theory.
Yeah.
My theory was private credit is just subprime mortgages with makeup on it. That's what I said.
Mm-hmm.
Because the lending that happens within this marketplace is directly through institutions. They're not going the traditional routes. They're
Right.
not going to the public markets, into the bond market to raise money. Why can't they go the traditional routes to get capital? It's because they're probably companies where their balance sheets are not that strong, cash flows aren't that strong, credit ratings aren't that strong. So therefore, they have to find an alternative route to get access. Kind of like somebody with bad credit who has to go get a payday loan with a 23 or 30% interest rate.
Mm-hmm.
Now, I'm not saying it's that bad. And when I talked to ChatGPT said this is not subprime. But to me, what I'm trying to look at when I look at the private credit market is the quality of the companies that are being issued the debt. They're not high quality.
Mm-hmm.
They're very low quality. And you just have to know if they have the cash flow and the business to meet their obligations. We saw defaults already.
Yep.
And the only reason why the rates on the yield of private credit is so high is because the default risk is high. So remember, when you're in the fixed income market, when you're issuing debt to someone who doesn't have a good credit rating, you're going to give them a higher interest payment. You're
Mm-hmm.
going to be like, because you might default on your payment, I need more interest, right? Just like
Mm-hmm.
if someone with a 500 credit score walks into a dealership and someone with an 800 credit score walks into a dealership, they're going to get two different types of
The different
rates.
rates. Yep.
So we will see if there are more major defaults. If there are small defaults, I don't think that there's going to be a lot of leaks. But if we start seeing major defaults, when I'm talking about like billions of dollars and like, hey, we can't pay you,
Hmm.
and that domino starts to fall, then to me, I think things could get
It'll be
bad.
a
So I'm
problem.
I'm I'm watching spreads on the low quality bond market, and as those spreads start to get wider and wider, that will be my signal that okay, might be a good time to start shorting these private credit firms.
Yep. 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 And what will be the overall, I guess, impact on the market though? Because whenever we see a sell off in one sector, it seems like the market react to overall sectors. It's like, would this impact the overall market or
Yeah,
just the private
I,
credit sector? Okay.
I think the overall market is going to get hit, because think of what happened in 2008. That was mostly concentrated within mortgages and housing,
Yep. Yep.
but everybody got clapped.
Everybody got clapped. Yep.
Everybody got clapped. Look what happened in, you know, just this Liberation Day, right?
Mm-hmm.
That had to do with product moving to and from, you know, overseas,
Yep.
right? But companies that don't even sell,
Software company, everybody got beat. Everybody got hit.
everybody got hit.
Mm-hmm.
So when the bond market starts to price in higher risk in the market, there's usually not going to be any safe place to hide. So we
Mm-hmm.
are We're about 85 basis points from the level where I would say I'd start hedging my long-term portfolio.
Mm-hmm.
But we're
Mm-hmm.
not there yet. Not there yet.
Yep. But overall, when stuff like that happen again, no panics, opportunities is going to show up, and that's when people actually start making more money. You know what
Correct.
I mean? So,
And I will say if we do get a sell-off, again, if it's concentrated in the private credit market, that is when you start looking at high quality
high quality
companies
companies. Yep.
whose long-term stories are not affected by the noise.
Yep.
So NVIDIA was $88 last April.
Yep. Yep.
So think about that. If something goes wrong in the private credit market and every stock is selling off, then you have to start using common sense and say, okay, this is a private credit sell-off.
Mm-hmm.
Everybody's affected. Where can I start looking at good quality companies to invest in to hold long term because they have attractive prices?
Facts.
And
Yep.
that's how you run the game from there.
Yep. Yep. But yeah, man, we this is definitely something we keep an eye on long term and see exactly what's going to happen. We shall see if this is actually just an alarm, and we'll figure it out and fix it before things go crazy, or if that's actually going to be a real disaster that we're waiting to happen. So
Correct.
to be continued, as we will say. Let's move on to AMD, man. AMD made another deal with another company. If you guys remember last year, AMD actually made a similar deal with OpenAI, right? They made a deal with OpenAI to be able to sell their chips and all this stuff to ship to them. AMD struck another deal with Meta. They have agreed to sell up to $60 billion of AI chips to Meta over the next 5 years. This deal also gives Meta the option to buy up to 10% of AMD. So not just the chips, but they get the chance to buy a share of AMD. Somebody knows something that, at Meta. Meta has been spending a lot of money on the whole AI infrastructure. You know what I mean? If you guys know Mark Zuckerberg, when he goes all in, he goes all in. You guys see what happened with the Meta Lab. He went in like I think they spent like over like I don't know how many billions of dollars, and they scrapped the whole thing, and they're like,
And
"Yep,
wasted it.
let's
Wasted it.
just let's just stop doing this. We're moving on to this." So the man is he's betting the whole house on the AI stuff. So I mean, partnering up with AMD I think is a good move for them. What does that do to Nvidia? I don't know, but it's like overall, I think it's a good move for them to be able to partner up and with somebody that's actually making the chips for them. They get to have a little bit of say what kind of chips they want and all this stuff. You know what I mean? Not just become a customer, but actually part owner of the actual company. So let's talk a little bit about that. What does that do for the market and the overall AI industry?
So I think that if you're looking for a 1A and a 1B when it comes to chip making, I think what it does is solidifies AMD as a good second option. I think from Meta's standpoint, it helps diversify them away from being too dependent on NVIDIA.
Hmm.
Because NVIDIA, again, to me, they got so many people tugging at them for their chips, right? Let's just say, and from what I've seen with Mark Zuckerberg, when he wants something done, he wants it
Hmm.
done with the quickness. So I still think that NVIDIA has the more superior chips in this space, but AMD still has chips that can do what it seems Meta needs them to do
Yep.
long term. So this is a 5 year plan, and giving up 10% of the company, ooh, that's a pretty
It's a big
that's a
chunk.
he- that's a pretty good chunk. So,
Hmm.
um, and I think they it was done via warrants. So I guess Facebook has the option to start to buy equity into the company at a later date. So I think it's good for Meta. The one thing that we'll just have to wait and see is, does Meta spending eventually hit their bottom line and do they become more efficient long term? Because the capex spending that Google, Meta, Microsoft, and all these companies are spending is crazy. Like it's a lot.
Hmm.
So when will we see return on investment? I don't know. But yeah, we'll just have to wait and see. Meta is not scaling back on anything AI related at all.
Right.
They are
Right.
they are ready to write checks.
And that they are. And they're proving it too. They're putting their money where the mouth is. So they're not playing around. You know what I mean?
No,
So
nope.
again, this is long term is good for Meta. I mean, I think they'll benefit from this, like you said. They'll probably give them an edge on be able to get their stuff a lot faster, but also have a say in how and why and what type of design they need. So again, it's a good move for them. A lot of those big tech companies are doing that, partnering up. We see something going on with Intel also, like, oh, these companies are basically like, you know what, let's just own a piece of that company so that way we can actually have a say into what's happening.
But
Um,
who's the true winner in this Meta and AMD
T-
deal?
TSM.
TSM.
Yep. It's always going back
That's
to
the
TSM.
that's the real winner. That's the real winner. And I
That's
keep
always
trying to
going
say
back to
this.
TSM.
If AMD needs chips or NVIDIA needs chips, they go into the same place.
Mm-hmm.
So,
Mm-hmm.
you don't got to pick a side when it comes to do I go with NVIDIA? Do I go with AMD? You just go with TSM.
Yep.
And the
Yep.
crazy thing is TSM doubled their market cap in less than 2 years. Because I
Yep.
remember AVGO beat them to the $1 trillion mark.
Mm-hmm. Mm-hmm.
And then when it came to getting to the $2 trillion mark, TSM just blast off.
Go through it.
Yeah.
Go through it.
So TSM to me, they're still the winner. They're still the winner.
Yep. And they're definitely dominating. TSM is not an American company, but
No.
they have manufactured. They just at the direction of like Trump and his administration, they start building more plants and stuff here, so that
Hmm.
way they can kind of take advantage of certain things. I just want to touch base on that. Like, I think what we saw with outsourcing back in like 2004, maybe like the early 2000s, where companies would start outsourcing to outside to be able to kind of pay less and all this stuff. I think we're gonna have the inverse problem here coming next. I think
Mm.
now that we're having like companies from outside, like, oh, okay, so you guys don't mind if we bring our manufacturing down here as long as we provide jobs for people and stuff. My thing is, a lot of those companies are not new. They're not like a new company or new manufacturing that's showing up. They most of the time they're competing with another American companies that already exist in America,
Mm.
and they come in with more efficiency. They come in with higher technology, faster, making all these things a lot more smoother for people. And a lot of times they make it cheaper. So guess what? Consumers are gonna leave the American made products and go for a company that just showed up and making things the same things, just make it a lot cheaper. You know, there's a really, really great story in Ohio where this manufacturing glass that's been existing since like the 40s or whatever. They make glass for automobiles. Within 2 years, their sales dropped down by 50% because a Chinese company showed up and created the same exact product. The only difference is they make it faster and they make it cheaper. And guess
Mm.
what? Everybody went to them. Whether you're American or not, their customers left the American company and went to them because they're able to get stuff that's cheaper and able to get faster. Right. So I think we're gonna see the inverse problem that's gonna happen is like a lot of American companies are gonna lose edge competition if they don't really scale up a lot quicker. You know what I mean?
Mm.
So again, it's great to get outside companies to come and build here. Yes, employees are gonna get paid. Yes, the economy might do better, but it's like the American companies, I think they're in real trouble. Like, I really think if you own a manufacturing company or something that somebody can come from outside and build, another prime example is Tesla. If Neo or one of those things got granted to build a plant here in the US, what happens to, do you understand what I'm saying? Like, what happens to Tesla? What happens to if a robotic company from China came like, okay, we
E-
can
E-
build a manufacturing here.
Elon will move mountains before that happens. He will move mountains. He'll promise Trump a third term before he
I
allows that to
mean,
happen.
I'm just saying, man, like, I think we're gonna see a lot of the inverse problems that we've seen with outsourcing, but the only difference is gonna happen here on the soil of the United States.
Hmm,
You know what I mean? So
that's
yes,
an
bring the
interesting take.
jobs. Yeah, bring the jobs, bring the manufacturing here, bring everything that you can. But guess what? You're gonna be competing against American companies that's been around for like years, for hundreds of
Yeah,
years.
yeah.
You know? So it's not easy, man. You create a solution for one, you create a problem for another. So you just gotta figure out which one you want to live with most. So um, but let's move on, man. I know this is a very interesting topic that we've been talking a lot about. So it's talking about all these big tech companies and them investing in like the data centers, the AI, and all this stuff. Guess what? It creates a problem when it comes to energy, right? So now we're seeing all these big tech companies are heading to Washington to be like, hey, we are willing to pay for our own energy. The reason why they gotta do that is because those data centers they need to run 24/7. And we talked about it. They burn a lot of energy. If you heard the story about it that was happening in Pennsylvania where the residents are not paying their electricity bill went up like crazy because all the data centers that's around them. They run 24 hours, right? So now the big tech companies need to figure out how can we contribute and fix this problem because honestly, it's the problem that they're creating that we are not ready for. We haven't built the grid, we haven't have the enough power to be able to kind of like accommodate for all this new um, power resources that's going to be draining us out. So again, we're talking about nuclear in the past. This is going to come. This is going to be really, really important. We talked about how to build renewable energy and all this. This is going to become really, really important. So is this going to be an acceleration for nuclear plant to be built a lot faster? The SMR technology we talked about. I don't know, man. What's your take on this?
So what I'll say is I think it presents two different types of opportunities. So
Mm,
Trump is trying to keep people like you and I from having to pay to front the bill for these tech companies because of their data centers.
hmm
Trump is saying, hey, you got to pay for your own power. What I really think now that you need to start thinking about is the infrastructure for that needs to start being built.
hmm
Who are going to be the major players doing that? And as you mentioned with SMR technology, I think that off-grid power sources are going to become more and more important to fill that need. Because again, traditional power, you still got to go through the grid, you still got to do all of these
hmm
upgrades and stuff like that, right? And I'm not saying that we're going to move away from that, but I think diversification of power sources is going to be needed for the future.
Yep.
So, we talked about, one name that really made a big move this week so far is CEG. CEG was a $243 stock a couple of days ago. When was that? It hit a low on February 5th. Now it's trading at 325.
Yep.
So it's made a pretty significant move. We talked about CEG. We did the analysis for CEG.
Yep.
Um, but there to me, there are going to be a lot of winners in this space. And what I would start looking at is not only looking at the traditional power providers, the nuclear providers, but also look at the companies that build the infrastructure around power development.
hmm
There's a lot of names out there. I mean, I was doing a deep dive over the weekend and built an ETF with some of these names. There's a lot of names in there that you can really start doing research on and finding out who are going to be the beneficiaries of this need. Because I'll
hmm
tell you right now, Billy has said this millions of times. The demand for power is it's only going one
hmm
direction. It's
Yep.
only going up. And right now, the infrastructure is not there to handle the need for what AI will demand in the next 5, 6, 7, 8, 9, 10 years. It's
Yep.
not there yet. So,
Yep.
if there's a place where, there's a lot of opportunity for growth in the future, to me, it's the power place. And
Yep.
again, we look at utility, the XLU is outpacing the S&P 500 by 8 times. And we're only
Yep.
in February. Now, whether this continues until December, I don't know. I can't
Yep.
say.
Yep. And it's quietly too, because not a lot of people are talking
Quiet.
about
Nobody talking about it.
it.
Nobody talking about it. You're not hearing that on the news.
Nope. It's quietly just moving along. Nobody's like mentioning it. Everybody's worrying about AI and bubble and all this stuff, but
Yeah.
they're moving on to
C
the next thing.
CEG is quietly moving. What's
Mm-hmm.
another one? NRG, I think, is another
NRG.
one that's been quietly moving. NRG was $140 stock at the beginning of February. Now
Mm-hmm.
it's trading at 189. Um, what's another one that's out there that's starting to move? NNE is another one out there. And so,
NAE.
I mean, listen to the Wall Street Rundown.
I'm just
That's
saying,
all I'm saying, man.
please.
That's almost because
Please.
I talked about this at the end of 2025, and I posted the graphic on my Instagram page. I said, could we be seeing signs of potential outperformance with XLU?
Mhm.
Move into 2026, we're already seeing it in the first
Already
quarter.
seen it.
Now, I don't know if it's going to hold into the end of the quarter, until the end of the year. I can't say for sure, but we're talking about a 1% return in the S&P 500 and almost a 9% return in the XLU so far this year.
Yep.
You do the math.
Yep.
So,
And I'm gonna keep hammering this. Power energy is gonna be very, very, very critical. You know what I mean? So, and we're saying all this, and we haven't even had a single, especially okay, like we'll talk about Aklo, for example. We haven't had a single product just yet. You know what I mean? And if you look at Aklo today, Aklo is still ranging in that $60 range. 60, 65. I mean, it hasn't gone anywhere. It's still just like chilling in that same spot
yep,
since, yeah, it hasn't gone anywhere. It's just consolidating, right? Do I want it to see it below 60? I would love to see it below 60. But I mean, if you're willing to buy Aqua at almost damn near $200, the high of 193, like, come on. Like, I don't know what to say. This
yeah,
is like a crazy, crazy discount right here. But again, energy and nuclear is going to be very, very important because I do not see any other way to alleviate the amount of pressure we're putting on our grid right now outside
nope,
of this. I
nope,
don't see any other way to do it unless we go to the moon. Kind of what Elon is trying to do, send some what you call to the moon to do energy and stuff. Not the moon, the sun to do energy and stuff. I don't know, man. There's no other way I can see right now.
yeah. I will say this again: the whole Aqua story and the SMR story, there's still execution that needs to be done because
Yes.
again, we they need to be able to still hit on all the timelines that they have promised. And as long as there are no regulatory hurdles, red tape, and all that stuff, to me, I will say that I'm pretty confident that at some point when they become operational
Hmm.
and they show that they've got something, because Meta signed a deal with Oklo already.
Yep.
So will we start seeing more hyperscalers doing the same thing?
Yep.
We'll have to wait and see.
Yep.
We'll have
Yep.
to wait and see. But another thing I'll tell you to do more research on is do the research on, I think I talked about this last time, the recycling of the waste.
Waste. Yep.
That is another business potential that a lot of other nuclear companies are not really playing in that sandbox,
Hmm.
but Oklo is. Do your research on nuclear waste recycling.
Yep.
And they got a grant in Tennessee to, I guess, build a plant that handles all of that. If they're a major player in that space, if SMR continues to grow, I think that really helps the business as well. So,
Facts.
yeah,
Facts. I mean, I feel like we give you guys a lot of stuff today to think about. You know what I mean? So again, I feel like our major thing is always like AI, energy, right? We always talk about that. So keep an eye on those things because become combining those two together, and then all the other peripherals, data centers, what goes into data centers, we just talked about the waste, like what goes into the whole nuclear cleanup and all this stuff. We haven't even touched a little base on the quantum computing. I mean, that's when that conversation start happening, you guys are gonna go back to this episode and be like, "Yo, this guy's talked about this quantum computing a long time ago." But that's something that's still happening. That don't forget. Please do not forget about quantum computing. Like I know we talk about like, AI about a lot, but AI is the building block for the next level of computing, which is quantum computing. It is coming. It is coming. And just because we're not hearing a lot about it, I'm telling you, pay attention to that. Start building your watch list when it comes to that. Like I'm telling you, it's coming.
I think Ion Q reported today. I did
they
not.
they're flying right now. They
Oh,
went up.
really? Let me
Yeah.
see.
They were up like I forgot how much they were up. I was watching earlier.
Okay, so they
They're
closed
up
at
like eight set.
33,
Yeah, they're up like 8%, almost 7%.
8%. So the way I think about quantum computing is let me give you an example. So think about how we went from dial-up internet to DSL, then we went to cable fiber optic, and then we went to Wi-Fi.
Hmm.
So the move from AI to quantum is like moving from high speed internet to high speed Wi-Fi. Because 10 years ago, Wi-Fi wasn't really a thing.
It wasn't. It wasn't.
Wi-Fi was not really, maybe like 15 years ago,
Hmm.
Wi-Fi wasn't really a thing, right?
Bro, I remember when you had to like buy a Wi-Fi extender in your house in order to have Wi-Fi. You only have the modem. You know what I mean? Like if you want a Wi-Fi, you have to buy another additional device to turn your yeah. Right now, you don't have to worry about that. Just one modem, Wi-Fi. You know.
I mean, you go on to Starbucks, you got Wi-Fi. You go on an airport, you got Wi-Fi. You're on a plane, you got Wi-Fi.
Yep.
So
Yep.
all of those capabilities were off of what we got with high-speed internet through the fiber optic cable.
Hmm.
So AI will then eventually scale to quantum,
Yep.
and that will be the next thing, and that's going to require even more energy.
Yep. 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 And again, don't be late to those things because you can kind of see the natural progressions of things. You know what I mean? So if you're paying attention, you'll be there before everybody else. And again, some of those stories might take another 5, 10 years, maybe even more. But as long as you know it's coming, and once you start hearing quantum computing, you should already be in. Like you should already know exactly what you're going to be investing in when that time comes. So um, just keep an eye on that, man. Don't please don't forget about quantum computing because
Yeah.
yeah, Jensen has kind of been quiet a little bit about it because I'm pretty sure he's working on something.
I wouldn't be surprised if he start buying some of those companies out. I wouldn't be surprised because to
Hmm.
me, a lot of the stocks that are trading in that space, they're small companies right now. And
Hmm.
they're companies that don't really have any real revenue yet. So if they can't scale, but their product has um, value, some of these big players like Microsoft, Google, IBM, or NVIDIA might just be like, yeah, we're just going to buy your technology and you're going to
Yep.
be under our umbrella. So
Yep.
that's another thing that could happen within quantum if they can't scale. So we'll see.
Yep. 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 But again, man, even after quantum computing, go do your research, man. There's like a slew of other things that comes after quantum computing, but all these things kind of build on top of each other. We have I think they have like the neuromorphic quantum computing that's gonna come. There's a biological computing that's gonna come. The biological one is very interesting. They're actually gonna use DNA strands to store data. That's for me, that's crazy, right? Because I say if you look at your own DNA strands, it holds a lot more data than any data centers. You know what I
Yep.
mean? So
Yep.
if they can get data to be that small and be able to store it in a DNA strand, bruh.
That's crazy. When I think about that, that's crazy.
It's doable though, but it's just like you gotta find like the next step, right? You know what I mean?
Yeah.
So
Yeah.
all of those things kind of building on top of each other, and it gets smaller and smaller and smaller and smaller. And it's just like yeah, it's gonna happen, but it might not happen on hopefully happen in our lifetime, but you never know. You know,
Yeah.
the speed of technology these days is crazy. So, but let's move on to some of the economic calendar, man. I mean, tomorrow, of course, we get the initial jobless claims at 8 in the morning, and then we have the PPI and core PPI actually coming up on Friday. So we shall see how the numbers looks like. I think the forecast is supposed to be like 0.3%, I believe, for PPI. Or core PPI say 0.4% or something like that. So we shall see how the market react to that. Next week, new month, March is here. Can you guys believe it? That was so fast. But March is next week, man. We have a bunch of other reporting that's coming up on March. I'm trying to see if there's anything big coming out the first week of March. I don't see, yeah, I don't see any major reporting. I see like, manufacturing, auto sales, all of that stuff is coming up, but I don't see any like, well, we have the import price index coming up on Thursday, March 5th. That will be an interesting one to watch. But other than that, man, next week, I can't believe, man, March is here. First quarter is over, almost over, I guess, at
Almost
least.
over.
Yep. So that was very, very quick. There was definitely a lot of excitement from the first week of the year to hopefully the end of the year. We'll see what happens. The other big thing I'm watching is I'm trying to see when is FOMC again. I don't see it on here.
March 18th.
March 18th, FOMC again. Keep an eye on that one, man, because that might be one of the last ones that Jerome is gonna do. So that will be a very interesting one to see what kind of questions he gets from that. But yeah, man, before we wrap up, any last minute talking points you want to give to the people?
Nah, I think I pretty much covered everything that I wanted to talk to today. But again, I keep hammering on the fact I don't think you're going to find any other place with this type of quality investment ideas and analysis because a lot of the stuff that we talked about months ago, you're starting to hear everybody else start talking about it.
Yeah.
So again, if you find the information helpful, like, subscribe, tell your mama, your baby daddy, your
Tell
aunties, your uncles,
everybody.
your cousins, tell everybody this is where you are going to get the best quality information, period. Outside of what the headline noise is going to tell you, we're going to give you where you should really, really, really be looking. So
Yep. Yep.
appreciate the support for all the people that
Yes,
have
sir.
subscribed. But yeah, we try to grow this thing. So
Yes, yes. So that is for today's breakdown. Again, if you find value in this episode, in any or in any of our other episode, please share with another investor who takes this seriously because we want people who takes investing and trading seriously. Please share it with them. With that being said, my name is Billy Clem. I got Wale with me. This is a wrap for the Wall Street Rundown. We'll see you.